Morning, everybody. It's 8:10 a.m. It's September 29th. Hope everybody had a good weekend. Welcome, welcome, welcome. Markets are gapping up pretty big today. Crazy markets. September. Only have 2 more days left. So on Friday, the markets really try to see if they could go lower. There was a big bull trap early on. We ripped up higher, took it all back, and couldn't break the previous day's close. And then the only other option was to go higher into the close. I had a trade on, very frustrating. I had about a 15 point target. I got up to almost 13 points, and then it got my break even. And I was looking nice. I was like, man, if we break these lows, I think I was actually going for a 20 something point target because I thought we were going to possibly break the lows because tech actually wasn't that strong on Friday. However, the overall market was. And we'll get into that in a little bit. That's probably in the chop zone I talked about. We'll get into it in a little bit. All right. So why don't we get right into it? Oh, we also got non-farm payrolls on Friday. We have a lot of Fed speak this week. We have a lot of data coming out this week, and a government shutdown is looming, which is always this is always kind of happens. It seems like every year, and it doesn't really mean anything. But that's what's going on. Let's get into it. Welcome to my channel. My name is Steven Gonzalez. I use market profile and bond profile to find structure in the markets, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That's my engine. That's how I come up with game plans. I also use Anchor View Ops. Lets me know what's going on under the hood when the market opens. And I execute with Bookmap. And I use my weekly expected move indicator just to give me a feeling of what is expected for the markets. All right. That is available for free in my Discord. Okay. Now, hopefully, you join me every morning. Subscribe, set an alert to my channel. All right. Give you the market news, technical analysis, and the long and short trade scenarios towards the end of my stream. Okay. Now, if you want more in-depth intraday commentary, you will join my Discord, Confluence Trading. Go to the my YouTube homepage, click on the link, and sign up. All right. What do you ask you get when you join my Discord? Well, of course, every morning I give you the link when I'm going to do my stream. All right. Then after the stream, I bookmark everything for you. And then, of course, the live market updates. All right. I'm giving you intraday commentary. I'll give you my trades. Here's that beautiful trade that just hit my break even. That was a nice trade I put on. I went to break even. It actually wound up, really working out. I thought I was like, okay, this is nice. And it didn't work out. All right. I give you highlight reels of trades that are educational. All right. And if you go to the weekly expected move, I update that indicator. I did that this morning. Okay. Did that this morning. So, with that being said, why don't we get right into the futures? Let's do it. We got an elevated VIX today, which is interesting. Now that I think about that, elevated VIX and the market's gapping up. Very interesting. All right. The VIX is only up 63 cents, but still it's up while we move up. Now I know we have non-farm payrolls, government shutdown looming. We'll see. Okay. Bitcoin's up 2.87%, Ethereum up 1.97%, gold up 1.15%, Russell's up 0.65, Nasdaq's up 0.63, silver's up 0.62, 30-year bonds are being bought up 0.48, ES up 0.48. The Dow is up 0.36. Okay. Hold on one second. All right, that was my daughter needing my help for something. All right. Dow's up 0.36. Dollar is down 0.20. 10-year yield is down 0.67. And crude's taking a little bit of a slide back to that most traded price of the rolling year. In the current year, that thing is really just doesn't know where to go. It's like imbalance. So, all right, moving on to the Mag 7 Plus here. Coinbase. Coinbase has been coiling up a little bit. So that's up 1.88%. Nvidia actually has been coiling up too, up 1.04. Amazon's up 0.96. Google's up 0.88. Meta's up 0.75. Tesla's up 0.73. Broadcom up 0.69. A lot of things are up because we're gapping up, folks. The only lagger here is Apple. Apple's your lagger. Top sector stocks. Let's see here. Ooh, let me change this. I added some different stocks. I updated this list. I haven't updated in a while. Newport Mining. Or is that Newport? Yeah, I believe that's Newport Mining. I don't know why. I'm pretty sure that is. All right. It's a gold miner. That's up 3%. That's a very large holding in the basic materials. All right. So I added that because the miners have been out of control. So I think it's Newport McMurrin. I think that's how you say it. Up 3%. Gold, I believe, hit new all-time highs today or something. Palantir's up 1.10. I added Palantir. Palantir, I noticed, is now like the number 5 holding in the XLK sector. Okay, technology. Added GV, also high up there in the industrials. Okay. What else we got going? Nothing really lagging there. Let's go to the granular list here. Tilray. I saw President Trump make some mention of like cannabis being like health care or something about that. Shooting Tilray up 17.39%. Oklo had a huge pullback. Nuclear energy, they had some coolant tests. I guess it didn't go well, but this, I guess, is a buy to dip opportunity. It's up 6%. All right, EA's has some news about a buyout of something. We'll get into it possibly later. Western Digital up 4.37. Alibaba up 3. Vistra, that's utility power data center thinking. Lam Research is semi. All right, let's see. Laggards, really not much laggards, but Intel. Probably some profit taking. All right, so that's a list there. Moving on to sectors. Semiconductors are the leader today, up 0.93. Technology up 0.57. Communications up 0.54. Basic materials up 0.51. Discretionary up 0.46. Industrials up 0.41. Everything's up, right? We're gapping up. Financials, laggards, energy because of crude. But it's not much of a laggard. All right. Moving on to the economic calendar here. You have a bunch of Fed speak coming up this week. Okay. Today we got Fed Waller, Fed Hammock, pending home sales at 10 a.m. Then 10:30 Dallas Fed, followed by more Fed speak 1:30. Okay. And throughout the week we have more Fed speak, Chicago PMI, ISM data. We have initial jobless claims, and then on Fridays, non-farm payrolls and unemployment. Now, right now, looks like we're expecting the same numbers for unemployment. And non-farm payrolls, whoa, these are like low numbers, boy. Expecting 50K. Wow. So, we'll see. We'll see. Let's look at the financial juice to see if there's anything. All right, let's see here. It says Fed's Hammock said at 8:10. Inflation is a bigger concern right now than job market. Interesting. That was the opposite, I believe, that Fed Powell said. He said that they weren't concerned about inflation anymore, more about job market. But that's the opposite. All right, let's see what the schedule for today. So at 10:15, Trump signs executive orders. At 11 a.m., Trump meets with Netanyahu. Then Netanyahu, Trump press conference. All right, so that's important. We have Trump today, so be on the lookout for that. Some stock news here. Occidental Petroleum gained more than 1% after reports emerged stating that the company is in advanced talks to sell its chemical division. Okay. Then it says U.S. defense stocks rallied after the Wall Street Journal reported that the Pentagon has outlined an aggressive push to expand missile production. All right, there's a Raytheon, Lockheed Martin. Those are your defensive stocks. Let's see here. Here we go. Gold exposed stocks rally as the yellow metal touched a fresh record thanks to a weaker dollar and worries over potential U.S. government shutdown. So here's some of those, and there's your Newmont Gold. I'm sorry, all right, it's Newmont. Newmont, I don't know why I'm saying Newport. Sorry, Newmont. That's the ticker NEM. That's the one I was just showing you. I put in that basic materials. Okay, moving on to some more stock news. So, let's see here. Cannabis stocks surge after Trump endorses cannabidiol for senior health care. U.S. Democrats, Trump set to face off a budget battle that could trigger government shutdowns. Just trying to see if there's anything else here. All right, looks like Microsoft. U.S. President Donald Trump said on Friday that Microsoft should fire Lisa Monaco, who had served in the administrations of two Democratic presidents and is now Microsoft's global affairs president. I think this is after the former Fed director James Comey, which they obviously, I don't know if he lied or not, but talked about that Russia collusion with the election, which turned out to be no evidence there. So that's what's going on there. It looks like Toyota, the company, said its global sales grew for an eighth straight month in August. All right, that's what we got going on there. Now let's look at breadth. I like to look at that percentage of stocks over their 20-day simple moving average. Let's see where we're at there. 51%. So still in the middle. Still in the middle. Right in the middle. Just means that 250 stocks are over the simple day 20 moving average. 250 stocks are below. Pretty much a middling market, regardless of what the overall market's doing. I mean, well, put it this way. SPY is a market cap weighted index, so the bigger, heavy market cap weighted stocks is what move our markets, and the other ones really don't. So that's why, like, if you had an RSP ticker, which is equal weight, really shows you what is going on. Because if they were all equal weight, that's really what the market would look like. But that's not the market, right? So whoever decided that's how our market's going to move, that's, basically the richest companies move our market. Okay? All right. We're done here. I think we can get into, I think I might just do a little market internals recap and show you why there was a little sign that I saw on Friday, which made the markets, of course, mixed and difficult to trade. Not read, trade. All right, and let's look at those internals real quick. All right, let's do a little market internals recap just to show you what I saw under the hood. Okay. Now, my first reading, let's go to my internals. So what I want to show you is this S&P 500 advanced decline, which was, advancers minus decliners. So that was 357 is a pretty beefy number, but I want to show you, I want to see if my Discord, okay, let's see that I do, the first update I do around 9:45, 9:50 here. Let's see. Yeah, okay. So right here, see right here, that is a very bullish number. Okay, very bullish. And we opened right at the previous day's highs on Friday. So that even makes it more bullish because it wasn't like we were gapping up or anything. Well, maybe slightly, but like this is a beefy number. And remember, this is the overall stock market of the S&P 500. So at this particular time when I took this, I believe it was like 950. That just means 405 stocks were advancing minus declining. That's pretty much a lot. So just picture 400 stocks advancing, 100 declining. That is very bullish. If you look at this number here, the NICE, that's the Valdi, that's 2.41 stocks, 2.41 ratio of volume going into up stocks versus down stocks. So the overall market was very strong. All right, so notice right here as well, this white line is equal weight. That was a lot stronger because the infotech really was not that strong. Now, I'll go down a little later, 1052. You see here what we were doing? Notice tech, every top sector was red. Okay? This this number definitely went way down. And the internals were getting weak, right? Hence, hence why I went short. Okay? I went short right up in here. I don't know if I went short already. I can't remember now. But that's why I was like, okay, this market's weakening. There was a bull trap. That was at 10:52. Yeah, I went short. Let's see. What time did I go short? Around 11:38 I went short. So that's why I saw that. If we go to my trade, right? Right here. Let's zoom in here. So right here, this was a very, very incomplete profile to the downside. VPOC was to the downside. So what was I thinking? I was thinking, okay, I'm short right here, right? I'm thinking, wow, if because you just saw the internals like getting weak, right? They flipped. This was very juicy to take out because if this market, see what we did? We opened, we ripped, came all the way down, right? Came up here, came back down, played, and that's why I was like, okay, we're hitting the previous day's highs. I think people are going to take profits. That was that VWAP. This was nice. This went all the way down close to about here around the previous day's close, and it could not bust it because if we did, this was going to cause a nice move. That would have been a monster trade, but it didn't happen. Didn't happen. The market just didn't have the juice. Okay, it just didn't have it. Frustrating to say the least, but the market internals really improved back. Okay, if we go back to the internals, I don't even know if I put this up. Remember, we're doing the check out what happened. This is where the market bottomed out right here, right? This is the SPX, right? Right here. And look what happened. Equal weight never got weak. Started to rip up, and that brought up the market cap, and that was all she wrote, folks. Look what we did. We improved back 357, 2.41. The market kind of bottomed out. We had 3 days down, and it just didn't have any more juice to go lower. It's basically what happened. Okay? Just thought I'd share that with you. Hopefully you got something from that. Let's go into daily charts. We'll quickly go. We're basically in the middle of bounce right now. Well, we're gapping up. So right here is like, look, in the middle of this big range. If you want to call this a range, right? Like, you see how we just been playing in this area? This is FOMC. Boom, came to the top here, came down, back down to the bottom with FOMC, and we closed in the middle of this range. Garbage. That's not where you want to be. But now, where are we now? 665. We're all the way up here. We're back at the previous week's highs already. That's why I said this market is nuts. Okay? You got the short. Now the shorts are like, oh, they didn't get follow through. Okay? Crazy. It really is crazy. I say it every week. Market is like the best show on earth. Okay, they got a nice doji candle here for futures. Whoa, wait a minute, that's not the candle. Here it is. So we just came down, hit the 20-day simple moving average, bounced off of it. Now are we going to go hit these highs? Now I mentioned these highs last week. I said, ooh, those look like they're begging to be broken. Well, can they be? Possibly. Possibly. That's a good breakout point there, 67.56. It's looking like we might want it. We'll have to see. Qs. Look at the Qs. Okay, the Qs have a little trend line here they've been playing with. Okay. Never took out FOMC. Qs have been relatively stronger. Okay. Higher low. Where are we now? Basically at 600. Right at the prior week's highs. Like I said, very bullish. Can't say anything more than that. Never hit its 20-day simple moving average like the SPY did. Let's look at the Nasdaq futures. Yeah. Juicy, juicy. Right there. That's that double top and daily candles, that 25027s. This is begging to get broken. Now it's September. Now the only thing I have to say, and we'll get into it in the hourly charts, is this move up is kind of poor structure to it. So it's got a little bit of weak legs behind it. It's just crazy that we're gapping up this much. It is really crazy. I have to. And the VIX is up. Isn't that weird? That's so weird. VIX is up 4%, and we're moving and we're gapping up this high. Pretty amazing. Pretty amazing. Okay. Let's see. See what happens in the markets, okay? Moving on. Let's go to the hourly charts. Not a ton to speak about, but we'll go to the hourly charts here. I think I put the wrong graphic up before. I pretty much know I didn't. Oh, no, I didn't. No, I didn't. Let's go to hourly charts here. Okay. All right. So, remember I said we were basically in ultimate balance here, and big moves happen from ultimate balance, right? Wild candles on Friday. That is volatility, folks. That is wild. You can see I said this was the chop zone, remember? Between 66, around 66.90s to the 70s. Anytime he's gotten here, it was just ugly. Okay? Now, what did the market tell us? It said we're not going lower than here. That's what happened. All that support. You tried and tried and tried. And then look what happened, right? You couldn't break these highs in the real-time trading hours on Friday. You kind of just closed around here, okay? However, coming from ultimate balance, right? This is ultimate balance. Big moves happen. Well, overnight did this. Boom. Oh, we'll take care of that for you on Sunday night. Boom. That's the move. Took out a bunch of supply. Look at these swing highs it took out. Totally changed the structure. Craziness. However, look at the move. It's kind of just not the best structure. So I don't really trust it as much. I do have some demands here, but I'm not leaning on them as much because it didn't do this, right? See how we went down? Because I consolidated and pushed, right? This is like straight up. So I'm a little suspect of this move. We'll have to see though, because if I have to say it, I'm a little suspect, but look at all this selling, right? This structure-wise now, taking out that swing high and that swing high, that really does change things. Because what short's still holding on, I'm not sure. Right? I'm not sure. Okay? This is last week's highs, right up there. Last week's lows, all here. Big range from last week. Okay, this is a previous weekly high. We'll see. We'll see. Moving on to the Nasdaq. Remember, it's been relatively stronger in structure. Okay. See this move? I don't trust it too much, folks. All right. I didn't say in the other chart the anchored VWAP now from these highs have been broken. That represents sellers. They are underwater. Okay, they are underwater. So we're in supply right now. We're kind of consolidating in the Nasdaq. Most traded price, what is that? Around 24620 right here. You can see this is just real ugly. Like you had little range and then this big range, and this right here was the key. I noticed this too with my short. All those longs were taken out. They were swept right here with this candle. Then you had a higher low and an hourly and another higher low. And then that was all she wrote. Because guess what happened? All the shorts took profits and that was it. The only thing you could do now is move higher. And that's what we did. Okay? That's what we did. So that's your hourly charts. We're going to move on to the market profile, volume profile now. Go right to that ES. I'm really going to look at this profile here. Okay. Now, this profile is balanced. The rolling weekly profile. You have a couple distributions, but that's excess. Value starts here. All right. And then we have excess. That's balanced for now. Okay. Remember what I said, this move up, I'm a little suspect of it. Doesn't mean it can't move higher. Just a little suspect of how it moved. Okay. Now, let's look at some levels here. We're gapping it now. Again, I'm going to say this again. Large gaps like this are not easy to trade. It's actually individual stocks sometimes are easier to trade, the big gaps. All right. Because they have their own little story. But this market has to digest this gap. And a lot of times it just gets a little difficult. Okay. So your gap fill. Now remember, gap fills in futures are highs and lows, not the close. Okay. This is not my rule. This is the rule of people who've been doing market profile, volume profile for like 30 years in futures. It's not my rule. I know in stocks, people think gaps are the close, which is fine. That's in the stock world. In futures, it's highs and lows. It's not closes. So I just want to put that out there. They're called range gaps. That's what I deal with. I don't care about the close. Okay. So let's look at this together. We have some important levels. All right. So we know we're gapping up, right? And check this out. Very important here. Very important. So right off the bat, folks, this is really important. We're 100% net long. That was the open right here. There is no short. There is no short activity from this open. It's 100% net long. Okay? That is a feather in the cap for a correction. Right? This is a very nice opportunity here. It's not easy, but I do see a correction. Okay? Now this is why. Check this out. So the longs from here getting paid. The The longs from here are getting paid. The longs from here are getting paid. And the longs from here are getting paid. Now, knowing that, and there's no short activity in the overnight, and the price is up in the overnight session at the top of the range, that is primed for a pullback. Okay, I'm not saying this is bearish. I'm saying it's primed for a little correction, a little pullback. Because any type of weakness or whatever, people are going to take profits and dump their position. And like I said, this isn't a macro thing. This is just like what happens, right? But I'm telling you, that's an edge. Is it difficult to trade it? Yes, because it might happen like open, open, and we do this right quick, and it's like, oh boy, I didn't even have a chance to really. Yeah, it could happen like that. I'm just telling you, it's real. Okay, it's very real. So we're gonna mark off the gap fill, 67.03. What does that line up with? The close, the overnight lows, and the most traded price of the rolling week, which is 66.93s. Okay, we have to mark off. There's demand here. The midpoint of the overnight, 67.16s, right here. Okay. Now we have a poor high here. Okay, lines up with a supply zone from the past. And we also have the most traded price of the overnight, 67.28s. We know longs are there. Okay. Now, if we go all the way back down here, this is chop zone time in this area. This is ultimate balance. This is where value is. Okay. I don't think we see this today, but we'll mark off this here. Now we're going to mark off the session. Okay. And we're going to get into scenarios. Okay. Well, who's in control? Buyers. Bulls. So I'm going to go here, okay, and give you some scenarios. Okay, pretty easy. Not easy to trade, but pretty easy. So what do I think could be viable for a long? Well, right off the bat, break that poor high, run up to the 67, probably in the 40s, right there. This is where I believe people might take profits, and you might get that correction, right? So even if it's small, you could pull back right here to the 67.28. It's the most traded price of the overnights. You'll know the market is strong if it holds that. And then you can really push back up and really try to take out that 67.56, which is it's just a breakout level here. Let's just put breakout level. Breakout. That's that level. If we get up there, you're going to push. Boom. Okay. Very important. Now, what if we get a deeper pullback, right? Based on this correction. You could pull back into this demand in the midpoint of the overnights. Also find yourself doing this. Okay. These are all bullish pullbacks. Now, if we have to go very quickly if we're going to test down here. If it's not quick, it's going to be bearish. But if it's quick, come back, fill the gap, and then try to go higher. But this has to be quick, and the internals cannot be that weak. Okay? That's what I'm interested in as far as the long. Now, short side. Okay? Remember what I said. Longs are getting paid. Think about that psychologically. If I bought it here, higher low, higher low, higher low, I'm feeling great. I'm like, woo, this is gravy. If we can hit the 67.56, I'm feeling wonderful. Okay. Now, We know we're 100% net long in the overnight. We know we're at the top of the range. Okay. So I want us to break that poor high in the overnights. I want us to hit the end of this resistance here, 60, probably 67.42s. This is where the rubber meets the road here. If the market is not that strong, meaning my internals, I will look for some type of failure and some lower highs. Okay. If you start to push and get weak, right, you're going to challenge the 67.28s. That's your most traded price of the overnight. Longs are there. If you take that out, maybe even retest it, this could cascade. Because remember what I said. I don't trust this move. Look at these bars. It's kind of just a stair step case up there. It's not really. This is the most consolidation you have, but this could really get ugly, folks. And you could take all this back right up to the 66.93s. That would be a beautiful trade. If you drop back into this, oh boy, that is not good. Back into ultimate balance. Now you can come back in here. It can get really ugly. It will get super ugly, super panicky. Okay? I don't trust this. See that? That is not the best structure. Okay? So keep an eye out for this. Okay? That's your ES. NASDAQ. NASDAQ blew up a lot of supply zones just like the ES. I had a bunch of supply zones that were blown up. Okay? Now it looks like the NASDAQ just broke its poor high. Okay? Now a little different because the NASDAQ had a couple of days last week where the tech was relatively weak. Notice in the ES, remember when I was like long's getting paid? This low was broken. Okay? So a little different. A little different. And we have somewhat of a balanced profile. Not like we did in the ES. See, you don't have the excess here that you had in the ES. So this is building us some volume here. You got value here, right? So we'll have to see. Of course, we got levels. We're gapping up, right? So we're going to talk about levels. We are also pretty much 100% net long in the overnights and at the top of the range. Remember, that is such a key thing to know about a pullback. Some type of correction. It's probably due. Okay? Now, let's talk about it. 248.15s, that's your 50% pullback at the overnights. Got demand right here. You got the week to date view up right there. Just started the week to date. Okay? And you're in supply with the most traded price here around 248.87s. Right there. Those are longs, folks. That's a very key level to recognize. So you're in supply with a overnight VPOC. Okay. Now gap fills 24745s. Actually lines up with the close and its demand and the overnight lows. Okay. Right there. Now we have our most traded price around the 24620s right here. Okay. Believe it or not, the most traded price of Friday was all the way down here and we're all the way up here. It's unbelievable. That is crazy. That is nuts. All right. So this is what we're looking at today in your NASDAQ. Right. Let's open this up, the session, and see what we have going here. Okay. We're going to get into scenarios now. I'll get you out of here. All right. Let's look at it together. Let's go with bull side. Okay. If I'm a bull, what do I want to see? Same kind of thing, even though we don't have a poor high here. What I want to see, I want to break some of the supplies, right? Get them out of the way. Pull back to that 2-4, like I said, 887's about. That's your most traded price of the overnight. If this holds, like holds, and it really can't go lower, we're going to go back up, folks. And we're going to try to knock out that 25027's. That's a breakout point. Just like I said in the ES, that's a breakout point. If you look to the left here, you got some resistance here that's getting ready, primed for a breakout. So how do we go? I don't know, but that is well within the market's reach if the market firms up, right? And basically the rest of the shorts puke up their positions. That's what's going to happen. Okay. Now we know we're 100% net long. I hope I haven't been saying net short. We're net long. The overnights. Okay. Now remember what I said. I don't like the structure of this way it's moved up. But if we get a deeper pullback and we break that overnight, we're going to get some selling here. That's where you get either you push up on this demand in the midpoint of the overnights, or this has to happen quick. Fill the gap quick. This has to happen quick. If we come down here slowly and slowly, that means the market is weak. That's where you can get that bounce. Okay? That's where you can get that bounce. That's what I like for longs in NASDAQ. And again, internals drive what I'm going to do. Okay, if we're talking about a bear side, we are in supply. We are 100% net long in the overnights. We are at the top of the range. All signs leading to a nice little pullback. Okay, we know have a little high volume node here, 24950s. So like I said, let it gap and go. Maybe hit that naked VPOC right here. That's just an untested most traded price of a day. Maybe we then go and do a higher low, lower high, I'm sorry. This is your key right here, that overnight VPOC. If we start to cut through that, yep, we're going to break this support and we're going to cascade into this level. Now remember, this is not the greatest structure at all. If you break the 24815s, we're going lower. We're probably going to fill that gap. That's a beautiful trade. Now, if we fill the gap and start going into range, oof, this can get ugly. You can go right down to the most traded price of the week, around the 24620s, like I said. Break this, all hell breaks loose. You go back to last week's lows, 24422s. I don't know if this happens, but it could get really ugly really quickly. Okay? Can get ugly very, very quickly. Okay? So, like I said, this structure is not great. This can get cleaned pretty easily. Let's see though. Big gaps are not easy to trade. This is not easy. The scenarios are easy to write down, but the trading and executing it are not. Every day we get mixed signals. Every day the market's not all weak. It's not all strong. There's one outlier, and technology is the one you really need to pay attention to. Okay, if technology, let's say, is strong, but the rest of the market is weak, the market's going to have a very hard time going lower. It might briefly go lower, but it's not going to sustain it. Okay, but if tech is weak, usually the market follows where tech goes. But I've seen it where tech is weak, like on Friday, but the rest of the market was super strong, and it's just a matter of who's going to win that battle. Is tech going to bring the rest of the market down, or is the rest of the market going to bring tech back up? That's what happened Friday. But let's see. I have no clue. Like I said, the greatest show on earth is the markets, because you just never know. No one's smarter than the markets. Okay? That's it, folks. For me, if you enjoyed my analysis, please smash that like button. Help out my channel. Okay? That means a lot. Okay? And as always, please join me every day. I give you the market story, the market news, the economic calendar, the leaders and the laggards. Basically, what's going on in our markets. What's driving price? That's what I'd like to show you and tell you. Okay? I just gave you the long and short trade scenarios in the markets. Big gaps are never easy. And I always put that in my head that I've noticed that it causes, let me just reiterate the point. Why is it so hard? Because it's such a big move to digest, right? Longs from last week thinking, should I take profits? Shorts from last week going, oh my God, should I cover? Right? And then the market has to digest this big gap. Like, what do we do with this? Right? So that's why it's just hard. It's hard. Okay. We got data though coming out 10 a.m., 10:30. That Dallas Fed at 10:30. I don't know. I think I'm comfortable trading after 10. That home sales usually sometimes doesn't do anything either. So we'll see. We'll see. All right. Now, of course, if you want to get in-depth coverage from myself, you join my Confluence Trading Discord. Okay. You go to my YouTube homepage, click on a link, and sign up. You also get access to my trades. You also get access to the weekly expected move indicator, which is worth its price in gold. Okay. Put it on your charts. It's a huge edge to have. Let's see what stock hits expected move to the upside or the downside today. The week, not last week, the week before that, Google hit its expected move to the upside on a Monday, and it never really went anywhere beyond that. Last Monday, Apple hit its expected move to the upside, and it only closed like within $1 of its expected move to the upside. So the Apple had its upside capped. That's why I love to have it, because if I saw that move maybe in the past, oh man, Apple's killing it on Monday. Somebody might have got long. And now I won't, because I know the upside's capped. So that's just why I use the expected move, okay? So, if you want to join, sign up, join the community, ask me questions, okay? Other than that, if I don't see you in there, I'll see you tomorrow morning. But I hope I see you in there. All right, everybody? Remember, no trade to trade, stay green, and I'll see everyone tomorrow or in my Discord.